Hey guys, what's going on? So, looking at a couple pairs today. Obviously, we ended a week, so it's not obviously the best time to be taking any trades, but there is some trades there. So, essentially, this week's been interesting because the DXY has actually come up and tapped into a inflection area where we have had a little bit of a pullback, which we know was anticipated. We just didn't know which point it was going to really do that pullback on. Right now, we are in the pullback phase, so right now it's not the best area to be taking a trade short or long. It's quite subjective because this can still come up here, you can still do this, and then next thing we're in this sort of continuation phase and it goes up higher, and then we have something like that. So for these reasons, it's one of those best or better times to just not really even consider taking some sort of average position unless you're in a position to. I think a lot of people get caught out in these areas because they just want to get involved in the market because they think there's a turnaround. But when you zoom out and you really look at these positions, you start to notice that we are in a pretty strong uptrend. So even if we do have a pullback, it doesn't necessarily have to be very large or structural. And going off that, I think something which is also quite important, which I've come from an observation point, is that not every pullback has to consist of structure. So we do have a level of structure if we zoom into the 5, which again is very zoomed in to go and find something, but ultimately we would have had like a line in the sand here or even here, and what we did see was price did come into this here on the 5. Now it is good to kind of understand that sometimes we do get structures like that, but we don't always get them. And considering this position was here, and if you do look at it as a reduced risk, there was a position to be taken in there. This ultimately ran for around about 3.5. I don't believe that I would have really been looking for a 3.5 position now. I was pretty much going to look for the gap fill over here for about 7. So I wouldn't say that's the worst trade in the world, but again, it is a DXY trade there. I think right now what we're seeing is the next continuation, a little bit larger here, but I think this is still in the short momentum for this. It's just we're coming straight into news here, which is literally being tagged, but there was really a minor effect to it. Right now what we're seeing is section 1. This is the next section, and it's just getting a little bit more complex than it needs to be. I think what we really need to be observing is, do we see this as the area of value, which is kind of just coming into this, and price is just hovering within this? If we saw something like this, I think this would be much better. We had to push in, and then we had something like that. That, I think, hands down would be better for a short than trying to take something in here right now. The only reason I say that is because there's a little bit of liquidity sitting there. This is essentially seeking some liquidity right now from this move. The only problem with taking a risk entry there is that this is very directional now, and it's just really coming up. Who's to say it doesn't continue like that? So to mitigate against that, we want to really see something really just tap into this area, push, and then give us deliberate price action to then come into these lows as the minimum, and then to potentially actually come in and fill these areas. I think that's a much better outlook. But looking at that, that kind of brings you into either swaps or into London session next week, and I think it's one of those things we'll have to evaluate into next week. So it's okay to be on the standstill, to be like, okay, you know what, I need to be patient. I think that's where a lot of people do go wrong, is that they lack that, and they kind of just want to get something by the end of the week, and then they get involved in something here and they lose themselves, because they could have literally saved themselves from a loss if they waited for something like that. The other case is when you zoom out, because we are on the 15, you then look at it a bit more holistically, and you start to realize that this could actually be forming something completely underdeveloped that we're not fully aware of until we have enough data. But if the news does act as a catalyst for this to go higher, and then price is up here somewhere, then we can still look at price to potentially do something like this, where we then get a bit of a drop off, and then it comes in to become something a little bit more complicated that takes a little bit more time to develop, and then it just does something like that. I wouldn't be surprised if we did see price action like this as well. I think many a times I have seen price acting like this. Really don't think that it needs to come all the way back down here, because technically it has done enough for it to continue higher, and we are in quite an impulsive run. So again, it's one of those reasons why I'd be a little bit more patient. But when we do look at the counter related pairs, we can see some sort of continuation patterns in there forming, and there's a lot of potential entries in there, which I do like as well. So we'll have a little look at that. The SPX, another one which I think has a lot of potential. What I do like about this is that we are in all-time high territory. Obviously it's not the easiest one to trade up, but there was potential for entries. I think due to the elections we didn't quite get the perfect entry in there, but then when you do look at it on the line chart, most of the liquidity was sitting in that area there, and we did do more than enough to negate the buy. So from a perspective of where the volume was, it did do enough. But in terms of looking for a little bit more on the side of perfection, or meeting the criteria of what we're looking for, it didn't. So right now we would look for further continuation up in these areas. I think if we do come back down and we sell off a bit and we create a floor, we push up, and then we do kind of hover around and create something in this area, this could actually form to be quite a good trade. It's just, again, one of those ones that I think just needs a little bit more time to develop, and taking a trade so high up in the run does come with a lot of risks as well, because even though we know that the SPX US 500 is notorious for its long positions, we do need to be conscious about these sort of sell-offs, and it's one of those times where I think we could either just keep pushing higher, which is completely fine, or if we do go into some sort of corrective period over the course of December, I wouldn't be surprised to size up for January and then we get the next push. So something to also just consider when we are looking at the SPX. But we can see that price is just really on its way to the upside, and I think coming into 6,000 for the SPX, that's pretty insane. Considering from where it's come over since 2018, it's really made a move. And you can countlessly see like positioning in terms of these longer term positions. Probably not a position to be taking on CFDs, but if you are looking to add in onto your long term investments, you're looking at multiple positions where you don't, when you are buying stocks and stuff, you don't have to have these stop losses in place, so you can just buy and hold. It just means you won't make as much as you could with CFDs. But again, you can see a 24% return over the course of a huge amount of time on the CFDs. You'd get eaten away with swaps as well. So again, if you don't have the capital, it's one of those ones. But there is an abundance of opportunities in here. I think something that I've learned over time is that when it comes to trading the SPX, you do need to learn to read through the wicks as well. We're not always looking for perfection, but using the line chart, I think, sometimes does remove a lot of the noise that we do see, and it does enable us to make good decisions. So just simply sizing it off as for what it is, we can see that price does respect structure. It just has the tendency to extend, but when you are reading it like this, you can then make do with the pattern separation and be like, okay, you know what, I can kind of see what's happening here, switch back and be like, okay, it was incomplete, but it made sense, and then it broke out, and then it came back in and did a retest. And I think again, it just comes into layers and layers and layers of what you know and how to trade. So again, SPX isn't the easiest one to trade, but when you do understand how to trade from a price action point of view, you can combine a lot of your knowledge to make money. Again, same thing applies to all instruments. Right now we're looking at the JP225. I am still on the long bias. I know that we are selling off right now, but what I do want to see is that as we have this sort of internal structure here, I don't want to be trading against this directly right now, but it looks like we are kind of coming into this sort of running channel to the upside if we look at it a little bit more closer. And something I do like about this is that if we do kind of come down to these areas and then we start to push back, we can then get a good idea that This could form as a base for it to just test, keeping it simple. Obviously we understand the structure and stuff. This then kind of does whatever it has to do in here, comes in, taps into this area, pushes back up, and then let's say even if it's in this area here, we've missed a lot of opportunities on the way. You can see that from a perspective of continuation, probably not a 3, probably a 2 touch, just to bear in mind. But even so, we can still get positioned in there, and you'd have a pretty decent run to the upside, especially with these gaps being left in the market. And if we got positioned in somewhere here, you still have a pretty decent run off a 7-1 just on a simple pair like that. And that would be something quite interesting to actually observe, even though you'd be looking at this and be like, oh, but it's within a channel, etc. Well, I wouldn't put too much weight on the channel at that point. I would then see it as, well, we've come in and we've tapped into liquidity over here. We've then pushed away impulsively. Bigger players have stepped in. We've created deliberate continuation, collecting volume for the upside, and then we've pushed up higher, and then maybe on the back end of this retesting. That would be really, really nice to be looking for a long position. Right now, I think one of the most important things to be looking at, even within all of this, is some of the US related pairs. What I do like about Euro USD, for example, is that even though there's these sort of near misses that we've been seeing on the DXY and so forth, we can see that we are in a pretty strong rally to the downside. And I think these are the sort of market conditions you really want to be looking to get involved in, because a lot of the time when you do mark up and you understand where the value is sitting, it really gives you an opportunity to take advantage of these moves. For example, we would have never known that the value was sitting in these areas, right? It's just we understood that it was a potential, but we wouldn't have really known. But what would have really helped us is just basically simply seeing how price is responding to all of this. And internally we had structures, and we could see that this was correctively squeezing, and then we pushed away. We saw something similar on Euro New Zealand over here, which I'll go into after. But as we can see, again, we are within this range right now, and I just don't think that this is a complete structure. I think there's still more to it, and we just need to kind of wait and see into next week. It is a bit larger, and obviously we are going from larger correction into larger correction, and it's one of those ones where the DXY as well, again, it's just accumulating volume, so I wouldn't let the fact of the matter this put you off. I would just more so see it as the likelihood of this coming back up to retest this is not as high as it once was. I think more so what we could be looking at now is maybe even if it did come back up, it just taps into that as an override and goes. So I would look at it more so like this, and essentially just be waiting to see how we do respond to that. Again, it's one of those ones, I think it needs time to develop. Is there shorting opportunities in here? There absolutely was. How I would have seen it is I would have been looking at it like this. When we had the retrace there, technically there was an entry in here which you could have taken within this region. For argument's sake, let's say you took it in here and you got positioned in that area, you'd still be in the position running about percent, and you'd be holding through for about almost just about shy of 3%, which is completely fine as well. It's just not the one that I'd be looking for. I'd be looking for that more refined position, which we have in here. And then I go to the 15-minute, and then as we go into the 15-minute, we can then see it a little bit more clear. As we've kind of just structured it like that, that's where with the area we're looking to trade below, we can then see that internally we did have a bit of structure in here. Again, not the cleanest one, and this would have been more for me entry over here, where I would have been happy to take that, probably wick crop through there 12 pips, and I'd be running around about 2.5, and then to the low I got about 7.78. So again, this is a great demonstration of why sometimes not taking the entry all the way at the top but waiting for the next one can actually form more feasible in terms of the same move, but basically just getting involved within the move itself. Same thing applies to some of these other pairs. I just don't think, again, GBP USD is just kind of giving me those signs where, are we not going higher? Why are we kind of correctively coming back down? What's the strong reasoning behind it? It's a bit steep as well, and I'm just not looking for a particular trade on GU. So happy to stay out for now. With some news next week as well, we could see price kind of just pull its way back up at some point and then tap into these areas, push up maybe, and then we get a push down. That would be a more preferred entry, and then I would be more interested in this run. It probably won't be so directional, but that would be the run that I'm interested in, not the one from here where we are now. And for obvious reasons, it's not my typical sort of structure. I mean, you know, it's one of those ones where it's like it tapped into the low and then it started coming up. It hasn't quite fulfilled it. Then I have to kind of measure this on and be like, well, borderline 50% now. Are we just retesting that to then come higher? There's just so many questions I have which cannot be answered right now until we reach key areas. So this is basically the main area of interest for me. And I want to see if it does come back up there. It obviously is coming up there for a reason. Perhaps it's just looking to take out some liquidity. So that is what I'm going to really be looking at. And yeah, we'll just have to wait and see. I think right now it's a bit of a larger sort of mess. And if I get caught up in there, you know, it could be an average break even, this and that. I'm more than happy to wait for these higher probability trades in these areas, because those are the ones that's going to really make me money. At the end of the day, I could get involved in, you know, if I do choose to get involved in this trade, then I can get involved in the trade below, the next one, and the next one, and so forth. And, you know, it ends up becoming quite a decent run, and I get involved in quite a good area. So that's basically the thought process behind GU. We can see from a structural point of view as well that it does look pretty promising. It's accumulating a lot of volume, and it doesn't technically need to come up to those areas that I outlined. It can still sell off from here because it has done more than enough. When you look at it from a structural point of view and you really pattern separate this and you look at it, it doesn't technically need to do everything that we may be thinking it needs to do. It could just simply just be this, where you've got that corrective push up, taps into this, sells off, pushes higher, doesn't quite fill it, doesn't need to at this point, and then it just sells off. And if that happens, it happens, but more than likely I'm going to be waiting for the better opportunity, and I will be looking for an entry, or I'll be analyzing price once it gets into that zone. So that's where I'm really interested, when price approaches this area here or breaks above and then goes. That's what I'm really interested in. The next pair I'm looking at is GBP New Zealand. I think, again, GBP New Zealand's a bit of a letdown for me because it was looking really good, and then it wasn't, and then it was, and then it wasn't, and at the same time I've got it over here. You know, it's like we've broken above, we haven't really come back in. We did this twice actually, where on the 1 hour as well, we can see that liquidity was sitting here and we're looking for shorts, and then all of a sudden we had price basically tap into the liquidity area and then fail to go. And it did that a few times, and I think right now what I'm really looking at is to just see if not from there, to see if it's just coming up here to just kind of continue lower. Hasn't really closed. The 4 hour was looking good when it was retracing, it didn't close, but then again, it's one of those ones now where I just think it's better to just stay clear of this and just let it be. Let's see, Euro New Zealand. Yeah, Euro New Zealand as well, likewise, was looking pretty good. What we can see here on the 15 is we had the liquidity area here. We then came in with a 1, 2, 3, extended, had a bit of a squeeze, and then we dropped off. Unfortunately, it just wasn't the one at this point. And yeah, it's just getting a little bit more complicated. It's getting to the end of the session. I would really just avoid this now. You know what, Euro New Zealand did look really good. Let's have a little look. Hourly, yeah, it's just right now it's just not giving the right sort of indication that this is the way. It's still within this corrective squeeze. We haven't really been able to get anywhere. I would probably wait till next week now, because this is likely just going to kind of just float around, really just mess about, could do this, and then it just continues going higher. You know, and that's a strong possibility. Given how GBP New Zealand's also looking, it's not giving me the best vibes. I mean, I was really interested in seeing that, the continuation, and then the drop, and that's as simple as I really wanted to see it. But now If however much this 1 hour closes now, we're going to get a clear message from the market. If it does kind of close with that sort of high test, and it's there, then the next candle would just really have to follow through. I would just have to really see that. Again, it's speculating a lot on the markets there. It would be in line with this, because if we still look at it on the hourly, it looks okay, but that's not a good sign. If the candle like this closes on the 1 hour, it's definitely not a good sign for that retrace. And if you were to get involved in that retrace, I would just probably get out personally, because usually when you do get confirmation, the next candle usually is a follow-through candle, so it would usually be down here somewhere, and then you'd be like, okay, great, trade idea was great, but I think the next hour is giving us a clue now, and it's just basically letting us know that this isn't the best scenario that we're in. Let's wait and see, because even so, if we do zoom in over here, we look at it, it's still borderline below that 50% off that retrace. I just don't like how it's just really took out, it's really pushed lower and then just really retraced back in, and honestly that's not a good sign for bigger players stepping in. But it is Euro New Zealand, and if there's one thing I know about Euro New Zealand is it does have the tendency of doing things like this, where, and I think I've explained this in various other videos, where you'll have your sort of structure, it will drop and it will come back up, test it, and then kind of follow through. And it's done that quite a lot of times, and it seems like that might be what's happening in this area right now. Again, the hourly candle will close in a minute, we'll get a good observation of that. Would I enter the position here? Absolutely. I think I personally don't see anything very wrong with taking a risk entry there. It's just you are taking it within the corrective squeeze. It's just you had to go to the 15-minute to see the refinement of this, and understanding something like that was possible, that would be more for reason for me to just completely get out of the position. So depending on the next hour, yeah, I would personally, with around about 30 seconds on the table, it's not really the best scenario, I'll be honest with you. Happy to leave it till next week. Yeah, UK 100 still at that low, nothing to really report on that. Aussie 200 actually looks pretty promising for shorts. I do like the fact that we are in all-time high territory. The daily is not closing in the best way possible, the weekly. The daily is looking like it's in a great area, but because that previous daily was so impulsive, I would want to see that really follow through to the downside. The 4 hour did kind of have a bit of a retrace in that area, which is good. Let's have a little look how Euro New Zealand closed. Yeah, Euro New Zealand didn't close in the best way possible. I think that is a perfect reason to just stay clear. What we'll probably see now is just more sort of messy price action. I'm not looking for that, especially if we look at GBP New Zealand. Yeah, again, like that's not what I want to see when I get involved on a trade. GU, yeah, as mentioned, Aussie US dollar. Aussie US dollar was very nice. I did take a break even actually. It was a bit unfortunate. So essentially, it was a bit my fault. We had the hourly retrace closed back up here. I then had to make a decision if I was gonna take the break even or hold through it. In the end, I did decide to take the break even, and it did end up kind of pushing a bit in and then pulled out and then kind of sold off. And in the end, I was kind of, I wasn't really bothered with it, but it did kind of dwell a little bit. And yeah, it was one of those ones. So let that be. The trade was here. I would have been running maybe a couple percent, but yeah, even so, it was there. New Zealand US dollar was also a possibility. It was just very messy. I wasn't looking for that really and truly, but the trade was definitely there. Take trade. US dollar yen, I think it's a next week trade. If we can come in, tap into these floors and then get a response to go higher, that would be great. If we follow through and create continuation below, that's even better. There's quite an abundance of opportunity. I think us knowing that we are directionally coming to the downside right now, Could look for continuation in here if we did get something a bit more clear. Again, it's USD yen. I could just do something like that, and yeah, I'm not looking to take a quick loss, so I'll leave that one. Aussie Swiss, you know what, this is interesting. I have only put Aussie Swiss and New Zealand Swiss on a few times, but when I have put them on, they've been very, very promising. There was trades in here which, again, I didn't really feel in the moment that I would have taken that. So then there was one in here which I, again, didn't feel like taking, but again, this is a pretty decent trade which could materialize into something pretty impulsive and big. Yeah, one of those ones. It's funny because I was looking at it all week and then I was like, maybe not, and then suddenly come in with the goods. New Zealand US dollar, likewise, it just about tapped into this area. Looked at it on the hourly, we had the little continuation there. In fact, I did see this one as well over here, and again, something that I'm still working on, but I just kind of felt preference wise, just didn't want to get involved in something like that. Just didn't feel like my type of trade in the moment, but again, high up in the run, pretty decent flag. It was there, the trade was definitely there, and yeah, we'll just see if that follows through. But likewise, New Zealand Swiss, Aussie Swiss, honestly, since recently, never really had it on watch, but I've been studying it a fair amount, and yeah, when it's moving and it's kind of got momentum kicking and it's got direction to go to, yeah, it's pretty decent to trade. It's just sometimes it does go in these corrective cycles where, understandably, you just don't want to really trade this pair. So you can see, like, during 2023 December all the way to February, there was just no trades, and then suddenly, boom, moved, and then we went, and then it went through this other period again during this period, and then again just decided not to take any trades there. So that's one in itself. We got Aussie New Zealand, didn't quite tap into the area, so I left it. There was more than enough. If we get continuation now to go short, it's there. 15-minute, arguably there was a trade in here as well. It's interesting to see, but again, I wasn't preferred for something like that. I would have, if that shaped up here and then we had a rejection, I would have got involved to go short. We just didn't get that, so I was happy to stay out. Aussie CAD, the US dollar CAD, I would leave this one alone. I would like to see this kind of push up higher and then eventually come back down. It's a big ask, so I'm happy to leave that. In the other case, if this did drop off and then give continuation down here, it's still one of those ones where it's kind of in all of this and I'm just like, you know, what am I really looking for? So I want to see some solid confirmation. The weekly though, I think if next week it does push up higher and it's up here, and then the week after it's all the way down here, we could get positioned, you know, coming into December for some really good trades or end of this month. So definitely USD CAD will come back on watch soon. Euro yen, I was looking at longs, didn't get the longs. It's going short now, it's completely fine. Just waiting to see if it creates a base. So what's nice is it's coming in to retest this whole area here, just moving that across. We've just rapidly pushed back into these areas. This is nice because if it creates a floor here, it gives it enough reason to push up higher. So if I invert that for a second, we can then see it like this, and now that suddenly becomes a really nice area to potentially look at shorts, longs. But again, with looking at how a lot of the other yen pairs are moving, if this continues to go short, it would make a lot of sense, and we just have to see it as, and zoom out on the weekly, we'll just have to see it as this was the overall range, kept to the original range, pushed out, rejected, and now we're trading back within the range and we're continuing to go short. That's as simple as I would want to keep it, but again, it's Euro yen, and you know, we can see throughout the most of 2023 and 2022, including 2021, we were just in this for a long period. 2020 to 2024, we're just in this rapid long move. So if we do go into a good short move, that would be phenomenal, but you know, again, I am more preferred to go for longs just because of how price has been moving. Although we have tapped into an area of liquidity, and from a higher time frame perspective, shorts are way more valuable right now. So let's wait till see how the weekly closes and going into next week. But euro yen and a couple yen pairs could definitely be on watch next week, just because of the current positioning. Aussie 200, again, like I said, it's not terrible. In fact, if you look at it from a daily, I clicked on the weekly. If you look at it from a daily perspective, you can see that we technically have that head and shoulder sort of feel to it. So that is looking pretty nice. And then we have UK 100. So yeah, UK 100 is basically just at this inflection area. I don't think that's going to hold to reverse everything just yet. I think right now we need to just wait and see, but there's a massive move to the downside to be followed through. So huge volume accumulation here. If this is really going to go, this is going to be the one. Looking at it from a weekly as well, it looks really good for shorts. So we could be seeing some great price action on that. Going back to Euro New Zealand, weekly looks okay, daily looks good. Yeah, it's just a shame that we ended like that. I wouldn't let that completely put me off, but then we see on the hourly, and yeah, I think a lot to be determined in these areas. It's just, we know that spreads will be very high. If it's going to sell, the only thing I can see here right now is this head and shoulders sort of idea to it. Again, it's one of those where it's just one of them. It looks like all the signs, but then you look at GBP, New Zealand, and then GBP New Zealand just on its way to the upside, and usually we know these two work together. So I think this is just a clear sign that Euro New Zealand's a trap as well. Something that I kind of do is just cross correlate those quite a lot, and then I kind of get that, but sometimes you do need to trade them independently, because whilst GN is moving up higher, what it could be doing is it's just trying to complete on an ending structure within here. This does seem very, very squeezed, I'll be honest with you. I'm just not one to take that trade to go short. I think this structure's done. It's basically moved almost the size of the structure out now. If we take that, we'll push it from, yeah, it's just over borderline 50% of the overall size. So it's creating something completely new here, something that isn't technically a part of this. If this is going to be something, then we'd have something very underdeveloped at this point, where we may be seeing something like that, which again, it's not something I'll be trading. So just a clear sign. Go back to daily on this. Yeah, it's just the only thing I can see is it's retesting. Is it coming to retest? And if that's the case, then what is it, just retesting the break, and the break was about here. So I don't really see that being the causation of this to just really move to the upside right now, but hey, we'll have to wait and see. If Euro New Zealand's holding and GBP New Zealand's moving to the upside, there has to be a solid reason for it. I don't technically see anything to really show me that this has a reason to move to the upside right now, besides the overall higher time frame. Because again, if you look at how it's moved away in response, usually when prices complete, we get a pretty decent response. What we're seeing over here is not a pretty decent response, and again, that's another clue to why we would have to be extra careful in those areas. So again, I'm gonna personally just stay a little bit vigilant and clear of this, because it'd be one of them situations where you take unnecessary loss. This could play out. There's a possibility that Euro New Zealand could just miraculously play out. It's just, again, weighing up all the confluences and everything around it. I'm kind of happy to stay clear of it. I don't want to really base a trade based on this head and shoulders as well right now, especially that I have to get so zoomed in to then make a trade out of this, and I don't like those situations. Something that I do like is, for example, the Aussie US dollar trade. I didn't really have to zoom in too much to see it. I can see that there was liquidity sitting here. I can see price responded, it broke the low, it then cleared a lot of the price action, created a clear deliberate price action, and sold. Same with Euro USD. This one was slightly more messier, but again, we can see that the trade idea is clearly there, and we didn't have to act in a certain way to get the trade. So again, that's something to point out, that if the trade is kind of forcing you to take something and it's feeling not so right, usually it isn't. And the case is, this is just, it's just being Euro New Zealand really, with its corrective price action. Don't get caught up in this, because what you do is you end up holding it, ends up closing, spreads widen, you take slippage or a bit upset, this and that. It's one of those ones where I just think, if you are caught into a trade like this, the best thing you can do is just let it go, really and truly. Yeah, just, it's just one of them ones. I think for a lot of the time, a lot of us, when we are trading, we do see things like that. And look, if you can afford to take the trade, take the trade, right? If you can afford to take it. But a lot of the time, it's not worth it, in my personal opinion. But this does look good. It does look good, and there's nothing wrong with taking it as a 1 hour retrace on that candle there, and just isolating it as a trade like this. And if you have your stops on it and you're holding it, fair enough. I mean, that's about 37 pips. So, again, you're trading into the low here. You got 1.6, so you can manage it to around about there if you wanted to break even, and then play 3% into that low. I just personally feel that there's probably a better trade in here. It just hasn't been presented just yet. Perhaps there's a trade in here, I'll be honest with you, with the idea of the head and shoulders, and then basically, I've had to go all the way down to the 5 minute here, but just something to bear in mind, that you've got this and that, and then you're kind of extending it and extending it again and again, and then next thing you know, it's all the way up here. And yeah, these things happen a lot of the time. So listen, if this is ready to go, it should be going, really and truly. It should just be dropping off right now. So just wanted to kind of emphasize on a lot of these trades. I think there's a lot of potential in the market. I think, again, we do get a couple good trades every day now, which is quite nice to see. It just means good filtration is required, because we don't want to be jumping on every single average trade. At the end of the day, if we're jumping in every single trade, then we're overexposing ourselves in the market, and we don't necessarily need to be doing that a lot of the time. And it's something that I have learned over time that has not benefited me massively. In fact, it's actually pushed me the opposite way when it comes to funding. By just trying to take every single intraday position, it doesn't necessarily always add up, because you might be playing a move from here, and then you take the trade and it's like phenomenal. Let's say you even caught a trade right here on the pip, right? And you're like, oh yeah, great, phenomenal trade. And then you're looking at this point to the left, it's running 3 point something, it pushes up, goes 5, and then you're like, okay, I'm going to hold it, around about here, and you get taken out. And then what happens is all the way up here and runs for 12. Again, at the end of the day, you can't anticipate something like that's going to happen. Obviously, you can see that the value was there. Same situation, you could have been holding around about 5, pushed up for 8, you took 5, walked away, great. The trade wasn't terrible at that point, but at the end of the day, your psychology is more important. And I think something like this can really test your patience. So a lot of the time, something that I would probably say is the better thing to do is mark on a ray line like that, and say if price trades below this and gives me continuation, then I'll take a trade like that, and I'll basically be taking it on like a risk entry or something like that, right? And then you basically just mitigate against all of the noise, because you're basically just say you're marking that up, and then price is broken, and then we're outside of that corrective squeeze, and then I've done that. So whatever happens in here happens, but until it's broken, I'm not gonna mess with it. And then eventually it does break that line, and we're over down here, and then you take the trade, and then you've had to not sit through all of that noise to then benefit from what's happened after. So just something to really point out, and something for you to really just kind of look at and kind of understand that getting positioned in the corrective price action is usually not in any way beneficial to you at all for your growth. All right guys, thanks for watching, and I'll catch you guys in the next one.